Alright, then. Oh yeah. What is happening, people? It's Lou and the mic yet again. Today is my technical analysis. It is the 24th of July 2021. Let's get right into this. I'm just gonna go and sit at my desk. But yeah. So next week we have a major or semi-major. I believe we're going to have a big change in momentum in terms of the dollar bulls. The idea behind this trade originally was that we would go higher on reflation, on the reflation trade. And obviously when there's reflation, then the Fed will come in to step up and increase monetary or decrease monetary support. But now I believe with the Delta variant, stuff like that, you'll see that the obviously reflation trade won't necessarily exist, and also to do with just U6 unemployment. So the bond market, U6 unemployment. So I've just been reading this, the macro compass, really good stuff here, and it was talking about how the broad labor markets like U6 has ticked below 10% for the first time since the pandemic on the previous data. And so there's also the participation rate. So you can see the U6 unemployment rate is still relatively high versus pre-COVID, and also the participation rate is very, very low, and has not even gone past the previous. And given the previous, you can see that that's been in a downtrend, because of course, coming back to what this means, unemployment means spending, and spending means facilitates the economy for growth. But the thing is that no one's like working. They've been pushed out of their jobs, and they're no longer in their jobs, and they have to resort to part-time jobs slash where was it? They could have been employed before, but now they're in part-time and maybe just unemployed in general. So this is the problem that like the US economy is facing, not just the US, probably all of the G7 is facing. So that calls for more monetary support, and it kind of just reiterates Powell's opinion or dovishness that he will not increase interest rates over the next few months or whatever, next few years, sorry. So just something to look out for. And what that means as well is that when you don't increase rate, or when you don't increase rates, the supply of dollars can continue to increase, and when the supply increases, then the price decreases, and that is the theme into next week. So just to kind of expand on that, I've been looking at, of course, COT reports. I've been updated it this week, and something quite interesting came up to me, or just overriding interest over the past 3 weeks. We have been incredibly short on the dollar amongst USD commercials, which is basically the central bank, the market maker of the exchange of US dollars, and that is facilitating a downward move. I don't believe they want it any higher, because a stronger US dollar could be maybe bad for exports, or it could be bad for some other reason. So it could be bad for also credit, so private sector credit, make it more expensive relative to other countries, and that could increase the time it takes to pay off that private sector credit, which is really, really high according to this article here, which I've been going through. So private sector debt as a percentage of GDP, and you can see that that's the GFC. We spiked around 173, I believe, or something shy of 175, and then we flatlined for 10 years up until the COVID crisis, and look, we are now up again. And given the fact that since the GFC, people are not as avid about spending their credit or increasing their debt, credit doesn't seem to be wanting to go any higher. And of course, credit facilitates lending. If you have when no one wants to take on credit, the supply and demand of that lowers interest rates. So the demand would be low, that means the interest rate would be low, but no one's taking up that because they don't want to. There's basically what this article is basically saying, the bond market is saying it, but it's saying that there's not going to be massive reflation. The reflation trade is dead, and that means that the Fed is no longer going to, or isn't going to, increase rates, and this move is almost like a fakie. So I'm still biased to the downside on this on the weekly and on the monthly, on the US dollar index. So this could be just the impulse, first impulse up, and then second impulse downwards. So something down here, maybe potentially, I don't know. So let's go to the weekly, and the weekly is up. Daily obviously is up, but it's a bit like, you can see I've been trying to look for shorts on this to go lower, but I believe we have access, supply over here, and the liquidity which comes with that. And I do believe there's been a lot of positions who want to, or people who want to go short now. Wednesday we had a bearish move, and that was engulfing. So we'll have to see whether that holds, this level holds, which is 92.9, or sorry, 90. Oh, sorry. 1 second, please. Yeah. All right. So can you hear me? I'm just gonna continue this because I was just talking. So my girl just came through the door, and I lost my place. Yeah. But anyways, so yeah, the idea behind this is that we're going to go down next week on the Fed becoming dovish. Although there is a few members who are hawkish, which are in favor of increasing monetary policy, but it seems that the reflation debate, as mentioned here, the bond market has already priced it in, and it looks like we're just waiting for a sell-off on the dollar index. Maybe we could get a spike up. It looks like we've been buying the dips over here with the algos and stuff. With this in particular, this candlestick here shows that there is a lot of buying liquidity over here, but I do think we will stay below 93.1, and yeah, see some downside here start to come into the market. So let's go to Aussie dollar, US dollar, and the Aussie is, yeah, so that was the original entry, and then you can see how that fucking supply got fucked. But yeah, the idea now is to actually look for buys here. So I do think we're going to get some buys. I do think we will remain in this area, so above maybe 0.734. There should be a lot of stops under here, so I do expect us to move downwards and potentially get some buys over here. So I'm going to move that red line here and go for entries over there. So for the meantime, it looks like we could go down in favor of the US dollar, and that's on the 4-hour chart. We'll have to see how that works. I'm trying to find the best entry on this. I got stopped out over here, but that's more than fine. But yeah, looking to go around here in terms of entries. Let's go to Kiwi, and Kiwi has been remaining strong in favor of the Kiwi, hasn't been going inside the dollar. Sorry, actually, yeah, as we're against the dollar this week, so my bias is against the dollar, so that would indicate an up move. And yeah, sorry, I didn't realize, but we did in fact, so I had like an entry here. I didn't really put my actual buy order in, but it seems that we pierced that pretty well, and the idea was there to enter around here. So it looks like we could be going upwards in favor of the New Zealand dollar next week. Maybe just a slight retracement down to over here, maybe even down to the green zone there, this demand zone, before bouncing off, or maybe even going down over here before continuing upwards. But I don't believe we'll pass down these lows on, I think that was Wednesday or Tuesday. So I don't think we'll go through Tuesday's lows, and we'll stay within the weekly candle, although it does look quite like we will get a bearish engulfing over here in favor of the downside. So something to watch out for. Interesting. Could be a slight change. I could change my bias. I'm not quite sure. It's quite an interesting candle. I think we could close bearish, maybe close down here, but not below this low, something like that. We'll have to see what happens, but that's quite an interesting weekly candle setting up. So yeah, I can't really say where that's going to go. Pardon me. And yeah, same with the pound. You can see that there's a lot of buying, a lot of buyers over here, or a lot of sellers trying to get into the market, and there's a liquidity void, and yeah, we bought back up. Yeah, a lot of people took profit. in terms of sellers, and they sold back to buyers, and now it looks like we're going back up. But we still have like a lot of sell entries over here, which obviously allowed the buyers to get back up there. But we would need to get that wick fill, that's what I'm trying to say. Because yeah, it just feels kind of strange to me. Strange stuff. I do look like a wick fill over here, which is in favor of the US dollar. We'll have to see. I think there is like a switch. I don't know. Something's going on here, and we could be going downwards. I've just got that feeling now. Let's go euro. Euro. Let's go on the weekly first. The weekly, yeah, closed bearish, but we are at demand, and we could be looking for buys over here. So let's go daily. And yeah, so I was long, I believe, on the 4 hour. My wisdom tooth's coming in, so forgive me if I like sound super boring. I was long around here, and then we went up, and then we went completely down. That was on the liquidity over there. Down, but we pressed up. We really catched this down move, and we stayed here above. But I don't know where we're gonna go. We have found support, of course. Maybe we'll spike down, probably get some orders over there before buying upwards. I don't know where. Maybe towards this area of liquidity again. But we'll have to see what happens with that. But yeah, I feel that we've run out of momentum here, but it's still quite. You can see actually we haven't run out of momentum. You can still see on the daily that there is quite a lot of momentum here, and it's eyeing this area. So we'll just have to see how that plays out. Can't really say for now. It's interesting, given the technicals and given next week. It seems that we're quite mixed amongst the majors, and USD Swiss franc. So Swiss franc. We have been going lower, and last week closed on a doji. It's not really at a significant place, so there's nothing really going on. It's going in favor of the dollar. Everything's going in favor of the dollar, but there is still quite a lot of bearishness, which kind of shows to me that the Fed could do something like interesting. That like the market seems to price in some kind of dollar bulls. So some kind of hawkishness from the Fed, but I don't know if this will be, I think it will be short-lived. So we have to wait for Wednesday to get that really strong, or even Tuesday, before we get that strong willingness to make the move, either up or down. But it looks like, given the current trends we've had, it looks like we're in favor of the dollar. But given how much resistance we've been getting over the past few weeks, couple weeks, it looks like we could in fact see a dollar decline. So it's very, very, very much mixed, and the only reason why I say a dollar decline is because the Fed and other central banks are net short by 95.8% on the US dollar. So we'll have to see what happens with that. And finally, gold. And gold has been paying so nicely on the EA. Crazy stuff, but I would say this is a wick fill in favor of gold bears. So it's been such a choppy place, a range, of course, but nothing really has gone on, if you know what I'm saying. Nothing notable except from obviously this access of liquidity. But what else can I say? Nothing in particular. Let me see. So I'm getting sidetracked here. How do we see? ICT people, I don't understand how you can they just do crazy stuff. But yeah, this is liquidity zone. Of course, we get injected that boom downwards, injected. But whatever, we'll see. Look, we're flatlining right now on the last minutes of Friday, of course. But I feel that we're going to go downwards on the daily still. Just that whole move there. There could be quite a lot of buy orders, which would move the market down quite a lot, with a larger selling force, I would say. I don't know, have to see. But yeah, we'll have to see about that. So it's interesting. I don't know what's going to happen next week. I came into this with some kind of idea, but then the more I looked at the market, the less of an idea I have beheld or whatever. So yeah, in terms of Wednesday, we have FOMC, and we have Tuesday consumer confidence looking worse than previous on the forecast. We have the rate, of course, is going to remain the same, and it's just what the Fed says, like forward guidance type stuff. And then on Thursday, we have advanced GDP, quote unquote. I don't really care about that, even though it's red. And then Friday, we have core price index, so just inflation readings. Have to watch out for that. 0.6% on the month for June. And yeah, so I have nothing else much to say here. Shout to this guy, the Macro Compass. You can subscribe to them. I will subscribe. I'll stay subscribed. But on that note, thank you for listening, guys, and I'll see you soon. Bye bye.